Hi guys, welcome to my channel. My name is Paolo from FX Solutions, and today I'm going to be talking about stop losses, which is a tool that you use to manage your risk. So this was requested by a friend of mine, and I thought why not, because I know a lot of people are struggling with placing their stop losses. So yeah, we're gonna dive into that today. So tune in up until the end. Don't forget to like, subscribe, and also click on the notification button. Welcome back guys. As you can see, I've got a descending structure here, and this is where I'm going to be doing our example for today. So if you look at the structure here, um, I want you guys to notice something. As you can see, whenever we went to the top of the structure, the market came falling down. As you can see, if you look here, we touched the top of the structure, and then we came down. We went up again, touched the top of the structure, went down, and then also here we came up, touched the top of the structure, and then went down again. So you seeing something like this, you should ask yourself what's gonna happen the next time the market comes back at the top of the structure. So having to think about that, I came to a conclusion that maybe price will also fall to the downside after it comes to the top of the structure. So before this even happened, I was already anticipating a move back to the upside to the top of the structure so that the market can crash again. So let's look at what I did after discovering all of that. So obviously, um, looking at the current market structure, in my head I already know that I'm waiting for price to give me a reason to fall once it touches the top of the structure. As you can see, this is when we touched the top of the structure. So from this point I was waiting for um, some sell entries or sell setups. So price came here, created this little correction here, and then fell to the downside, but price um went up again. Now, when price fell to the downside, I was expecting something like a correction and then a continuation to the downside, but obviously that didn't happen. Price began to correct upwards, so we started moving in an ascending manner. So when price began to move like this, obviously that's when I marked the high that we had, which was our highest high before all of this happened. So this was our highest high. We went down, and then when we started moving like this, and then when I saw that I couldn't get the structure that I had anticipated, I knew that there was actually something else to anticipate, which was a double top. So I was actually expecting price to come back to this high, create a double top, and then fall to the downside. So I had two things in mind. It's either price is gonna come here, maybe create some descending nature when it gets here, and then fall to the downside. But another thing that I had in mind was the fact that price could break the high before it could before falling to the downside. Reason being, I'm sure most of you guys know this, but this is called market psychology, where traders are trapped into taking the wrong direction. So initially, the price breaks the high, comes back here, and people will take buy entries thinking that this is a retest, and then this is how the market makers actually trap retail traders. So yeah, so I knew that price might break out of might break the structure and then fall afterwards. So I was open-minded about it, which is something that I think every trader should possess. um should always be open-minded with the setups. Even if you find a sell setup, you must also look at all the possibilities. Check if there is a possibility for price to go to the downside when you're actually anticipating price to go to the downside. So those are the key things that you need to check as a trader. So obviously we had this descending structure here. So we also had confluence, because if you can check, I was already expecting price to fall after touching the top of the structure, plus the double top also added to that confluence. Another thing that added to the confluence was the fact that we got to the double top in a corrective manner. So when I saw this, I got really excited because we had our first touch here, second touch here, And obviously I was expecting price to fall after that touch on the top of the structure. As you can see, um we also had the trend line like this. So if you go to the lower time frame, you actually see a clearer pattern here. So we had this pattern within pattern, and also this rejection, big rejection candle here. So all things pointed towards an entry somewhere around here, and obviously the stop loss slightly above the recent high. And another thing which is very important, the key thing here, the reason for this video is to show you guys the importance of a stop loss and how you should place it. So a stop loss shouldn't be, the number one rule about stop losses is that you shouldn't be risking um less than what you might actually gain from that setup. So what I'm trying to say here is that, let's say you are risking $20. Let's say if you put a stop loss, and then if you lose the trade, you're gonna lose $20. You should make sure that your potential return is actually more than $20. So what I like my stop loss as is I should actually gain two times what I'm risking on a certain trade. So that is my rule. I'm not saying you should apply that into your own strategy. People trade differently. We are different as traders, but the way that I've seen most consistent traders do. So yeah, man, and it's been working for me so far. So obviously entry was there, and then the target was the beginning of the correction. Now the most important thing to look at is the risk ratio. So your risk ratio is actually what's going to enable you to see if that entry is worth it or not. So if you check the ratio here, we have 2 is to 8. We have 2.87, which means you are risking way lesser than what you're gonna bring back from the market. So you're actually gonna get almost 3 times your loss if you win the trade, which is quite good. So it's very good also for trade management and managing your risk overall. So this is the end of the video. Thank you for watching. Please, if you haven't subscribed to the channel, do that, and then yeah, till next time.